What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be talking about what I believe is one of the most exciting stocks in the stock market right now, and that is PayPal. PayPal recently announced their earnings, and there has been a lot of discussion out there around their margin, their active users, as well as their free cash flow. So what we are going to do here in this video today is we are going to take a look at where those metrics have trended over the last couple of years, how that has impacted investors, and then I want to give my opinion on these metrics and where I see them headed in the future. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. We can see that over the last 5 days, PayPal is down over 2%. If we look at the last month, we can see from the start of right before earnings were announced to where the stock is trading at now, the stock is down almost 20%. Over the last 6 months, it has traded down over 22%. Year to date, it is down 17.5%. Over the last year, down almost 40%. And if we look at the 5-year chart, this stock is down 30%. So obviously PayPal is down in a massive way after earnings. But if we look at the results that were reported, we could see that EPS came just in line. Expected was $1.16, with reported coming in at $1.16. These are non-GAAP EPS numbers. And if we look at revenue, we could see that expected was $7.27 billion, and they came in with $7.29 billion. So both of these numbers are right in line with expectations. Even though the stock met expectations on revenue and EPS numbers, we saw plenty of articles like this stating that PayPal Q2 earnings is a disaster. Q2 results met expectations, but a sequential decrease in users and operating margins is a negative for investors. So let's take a look at what PayPal actually announced. We can see that total payment volume came in at $376.5 billion, which is 11% growth year over year. If we look at net revenues, they came in at $7.3 billion, which is growing 7% year over year or 8% on a constant currency basis. GAAP operating income came in at $1.1 billion, growing 48% year over year. Non-GAAP operating income came in at $1.6 billion, growing 20% year over year. For GAAP EPS, they came in at 92 cents, which compares to negative 29 cents in Q2 of 2022. For non-GAAP EPS numbers, they came in with $1.16, which compares to 93 cents in Q2 of 2022. That is 24% growth year over year for non-GAAP EPS. Operating cash flow and free cash flow were interesting this quarter because they both came in negative. Operating cash flow came in at negative $0.2 billion and free cash flow came in at negative $0.4 billion. However, these numbers include a negative impact of $1.2 billion that is associated with their European buy now, pay later loans. Other than free cash flow, investors have really been focused on operating margin as well as total active accounts for PayPal. And what we could see is GAAP operating margin came in at 15.5% for this quarter, and non-GAAP operating margin came in at 21.4%. And for total active accounts, we could see that they came in with a number of 431 million users. This compares to 429 million users in Q2 of 2022. So I want to start off by discussing total active accounts. We could see that in Q1 of 2023, they announced 433 million total active accounts, so they are down slightly quarter over quarter. However, what I want to do is I want to compare these numbers to 2021, because in 2021 we saw PayPal hit all-time highs in terms of its stock price, and we could see that at that time in Q2 of 2021 they had a total active accounts of 403 million users. And this chart shows it the best when we think about PayPal's active users and how it has changed over the last couple of years. We could see that back at the end of 2019 they had just under 300 million active users. However, over the course of the next year and a half, they grew all the way up to 403 million active users, and they were experiencing 24% growth year over year in terms of that number. However, what we have seen over the last couple of years is that has fallen off in a very dramatic way. In the past, they were growing anywhere from 12 to 18% in terms of their total active users. However, it has dropped all the way down into the single digits, where we are sitting at now of actually 0.5% change year over year in terms of its active users. And this number is threatening to go negative. We could see that in Q4 of 2022, they came in with 435 million active users. However, they have slightly declined down to 431 million active users. However, in my opinion, I am not concerned with this slight decline, because what I am more impressed with PayPal is the fact that they went through such substantial growth in a very short short period of time through the pandemic and still been able to maintain a large majority of these users over the last couple of years. So let's go ahead and take a look at operating margin next. We can see that for Q2 of 2023, they came in with a GAAP operating margin of 15.5% and a non-GAAP operating margin of 21.4%. And if we look at Q1 of 2023, we can see that GAAP operating margin came in at 14.3% and non-GAAP operating margin came in at 22.7%. So in terms of GAAP operating margin, we are actually seeing an increase of 1.3% quarter over quarter. And in terms of non-GAAP operating margin, we are seeing a decrease of 1.3% quarter over quarter. And if we look at Q2 of 2022, we can see that GAAP operating margin came in at 11.2% and non-GAAP operating margin came in at 19.1% year over year. So both of these numbers were significantly lower in 2022 than where they are today. We are actually seeing year over year growth in terms of their operating margin. However, if you compare this year to last year, you could see that the stock last year was trading at $101. However, today it is trading at $61.50. So even with operating margins increasing year over year, we can actually see that the stock is still declining, which shows a lot of discrepancy between what investors are focused on now versus what they were focused on a year ago. However, these numbers have declined since Q2 of 2021 when the stock was trading at all-time highs. Back then, GAAP operating margin was sitting at 18.1% and non-GAAP operating margin was sitting at 26.5%. Now let's take a look at free cash flow. We could see that in Q2 of 2022, they came in with $1.1 billion in free cash flow. However, in this quarter, they came in with negative $0.4 billion in free cash flow. And that has been affected by a negative $1.2 billion in their buy now, pay later loans. However, they're expecting the sale of these loans to close in the second half of 2023, and they are expecting around $1.8 billion in proceeds. If we zoom out and look at free cash flow over the last few years, we can see that the company has been relatively stagnant. They did have this big year in 2018 where they jumped all the way up to $4.6 billion in free cash flow. However, since then, they have really traded around this $5 billion mark, and they're expecting that they'll come in with free cash flow of around $5 billion again in 2023. When we look at revenue over the same time period, we can see that from 2018, they were bringing in around $14.5 billion. And then in 2023, they are now bringing in $28.5 billion. So they have doubled up on their revenue. However, this has not translated to free cash flow growth. And that is a little bit disappointing. You want to see revenue growth, especially extreme revenue growth like that, translate down to free cash flow growth. And that is part of the reason why we have seen PayPal fall, is because they haven't been able to translate that growth over to free cash flow. However, the stock is trading at a very low valuation. We can see right now it is trading at a forward P ratio of 12.45. So after looking at this earnings announcement, has anything changed with my thesis? The answer is no. I do think that margin, we are actually starting to see it increase year over year, and that could be a positive thing for PayPal moving forward. I think the competition factor is definitely an issue, and there are a lot of people vying for space in the same atmosphere that PayPal is in. However, I think PayPal has done a great job of getting users into their ecosystem and actually retaining them. They saw a tremendous amount of growth over the pandemic, and the fact that they've been able to retain these users for a long period of time, in my opinion, is very impressive, and we're continuing to see them grow their revenue and grow their total payment volume, which also is a very positive thing, and I think they will eventually translate down to free cash flow. But keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.